This meeting is being recorded.
Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time, back with Taylor from Life Goal Investments. How you doing, buddy?
You never stumble on the intro. I don't know. You never stumble. I've never heard you do it once. And it's quick and it's perfect. Appreciate you having me.
Awesome, buddy. Awesome. So, hey, we touched on meme stocks a little bit in video 1 and video 2. Let's just hit it in video 3. Meme stock investing, rug pulls. How are the retail investors just getting run by Wall Street professionals? It's a crime.
They're getting worked.
Yeah, they're getting worked. Talk about it.
They're getting worked bad. And the most recent prime example that's like so tangible, so easy to put your finger on and go, look what this person did, is Ryan Cohen, the CEO of Chewy, the dog or pet delivery company. I think it's mostly dog food and stuff. Anyway, he also has a venture capital fund that he puts money to work in the market in.
Yep.
And so he had a relatively outsized position in Bed Bath & Beyond, BBBY.
Mm-hmm.
And at the time he had bought in, his average cost basis for the fund was something like $15. And so he goes, you know what we're going to do? Watch this little trick. I've seen this one play out before. I'm going to take a little bet and put outsized money on the out call options.
Yeah,
so
like a year away.
Yeah. That is like almost you can't attain it. The numbers are so high that you could not attain it unless something absolutely wild and ludicrous happens.
Yep.
So what happens with that is there's a feedback loop.
Mm-hmm.
There's a couple things that happens with that. There's a feedback loop. There was a large outsized short interest, 43% short interest in that stock at the time. Yep. Algorithmically driven, what people have to do is say, okay, there is a big bet that it can get there. We need to de-risk our portfolio based on that. So that feedback loop starts to happen where people start to buy it because the quant says they can't have that much short interest if there's potential that someone is an outsized buyer that knows something at this big number.
Right.
And so that's the short squeeze. That's when the shorts start to get squeezed out.
That's just the start.
Correct. Because then it hits Wall Street bets. Then it hits Reddit. Then it hits the retail investor. And so literally what happens is he takes, again, from a $15-ish cost basis, lets the stock run for 1 day, and it gets up in that almost $30 ballpark, right around $30, and he starts to unwind his position between $20 and $30, most of it on the high end. I think he got out at the last bit at $29. So then what happens? All of a sudden, the market realizes there's this really optimistic investor that bought call options for 8 months or 12 months out from now that thought this product could do really well, realized that he didn't think that at all. He wanted to rile up the market. So the Reddit buyer buys in, the Wall Street bets buy in, the short squeeze get whacked, the stock price pops, and then he goes, by the way, I just sold my 9.5 million shares of this company, which is a 10% outstanding float of the company's shares that are outstanding. And then what happens? It goes right back to where it was and maybe even a little bit beneath it. And the Wall Street bets crew that got it at $30 a share now are licking their chops at $12 a share and going, how did this happen so quickly?
So again, this is a guy who was in a stock in a losing position in a big way. He goes, oh, there's 43% short interest. I'm going to run those people. So he takes a very small bet. It's again, it's $1 million. It was like $1.5 million or something. Which again,
was? Yeah, I didn't know the number there, but yes.
Yeah, it's about $1.5 million in option premium that he paid for this year out call.
Yep.
No, I'm sure it was hard to create because it's like who the hell would make this number?
They're like writing tickets on paper. They're like, wait, what did he say?
Yeah, did he really mean $33 a share, whatever it was? Then that gets put in the system because it'll show a big pop. It's like, and then all these machines or quants go, somebody knows something.
Correct.
I'm going to take some of my chips off the table. Short squeeze.
Correct.
That has a feedback loop where other quants see it run up with demand.
And when you get short squeeze, you go from being a seller to being a buyer. So you buy it, and then it incrementally drives it up from there.
And then in 24 hours, it hits Wall Street bets. And then 24 hours, it hits Reddit. And by then you've got every retail person on the planet going, here we go again. We're going to take out the shorts like GameStop, right? They actually had a hedge fund go bust with GameStop.
Yep.
We're going to do it again. Let's go, everybody. Mortgage the house.
Yep.
And this jackass is out of his position with a profit in a day and a half. And then I bet you he sells his options and
He did
makes
sell his
money on
options.
those too.
He sold his options. He's out of the option position as well.
And he's like, thank you very much, you stupid retail investors.
Yep. And I think it was, I think the profit, what I read was 68 million. I didn't fact check it, but 68 million was the profit from this day and a half
In a
worth of
3
circus he
3
had put
days.
together.
He
Yeah.
did it.
Yeah.
It's predictable.
But I think he's going to get squeezed. I think he's going to get squeezed.
I mean,
Market manipulation. I think the SEC will come down.
SEC's going to look at him and go, hey.
Yeah, I really do.
Gains.
I think that the options market is a transparent market. Obviously,
Sure.
Obviously,
everybody knows who did it.
This.
Oh, everybody knows.
It's a transparent market. When you see someone make a big move like that in a short period of time, that's too many red flags. How does he justify that? Like if he gets brought to court, yes, I thought this thing was going to quadruple in price because of the business model is improved. The business model shot. That's the problem.
Yeah, it's
with
done. It's going to go done.
That's why there's 43% short interest in it, because there's no, it's not a sustainable
business. And he's an executive, so he's on board. He's held to a higher standard.
Probably so. Yeah,
I
mean, he's the CEO of Chewy, which is a massive company, and he's an activist investor, so he's experienced. He's not. This isn't his first rodeo.
Because when you look at this kind of as an outsider, nothing he did was illegal. It was wildly smart, but who was left holding the bag? Retail. And
Correct.
I think that's where SEC comes in and goes, no. Bad.
Yep. And $68 million. And I mean, it's just absurd.
And again,
absurd.
All he did was set up a series of dominoes. He's in a losing position. He's upside down. He goes, I can fix this.
Watch this. It's only going to cost me $1.5 million to do it.
Yeah. I'm already down like
what?
$5 million. Yeah.
He put out, and he's getting blasted so bad, right? And rightfully so, I think. But like, and when I say that, it's because he knew he was going to pull the rug out underneath on retail investors, and they were going to lose their shirts. And that's exactly what happened. He said, I don't give a shit. I'm going to make 68 million for my investors.
They're not my problem.
Right. Not my problem at all. But then you rewind back on his Twitter to mid-June, and he writes this long-winded, or not a long-winded, it's like, 4 lines of text about it's unbelievable how these CEOs can go from running a company into the ground and still make all this money, but then the shareholder is left holding the bag. That's like the culminate. I don't know if that's a direct quote, but the shareholder is left holding the bag. And then he does this. It's like, oh my God. Yikes.
Yeah. Well, again, retail investors, Wall Street Bets, Reddit, they need to realize that what this should be a lesson is, first off, Wall Street Bets, you got your white whale. You took out whatever that hedge fund was.
Yep.
Now you're a tool in the bag of every other hedge fund.
Yep.
And you just got worked, and they will do it again and again and again.
Yep. And they'll ring it out. There's no doubt about it. It's something, and this isn't the first time this has ever played out. And this isn't the first decade it's ever played out in. It's just more transparent when it's on public forums and people are saying, go buy it. Look at the price. It's moving so quickly in the right direction. It's going to go to the moon.
Yeah.
Bang.
Well, let's talk. Let's do one more thing. The other thing that really annoys me, AMC, I don't know if you saw this. AMC, as I remember it, board of directors wanted to issue more shares. Their shareholders said no. Freaking executives. So then they create this special dividend called APE, which started trading today. It sounds good on paper. Basically, hey, if you own AMC, we're going to give you a share of APE, a special dividend, blah, blah, blah. But oh, by the way, they're giving out, I don't know what the number is, 30 million shares, but they're authorized to issue 9 billion. So they're just going to sell APE instead of AMC. I mean, it's like, really? Do you guys realize you're screwing the shareholders in all of this? I don't understand.
The AMC one is one I like. The management team there, I scratched the back of my head. They were, I was listening to the CEO on CNBC, and he's like, we're going to start delivering popcorn to people's houses. And I'm like, what? That's like, that is a business you want to be in? He's like, we have the best popcorn on the planet. And I'm like, you think people are going to pay $10 to have you come out and drop popcorn off at their doorstep? That's a business model that you want. That's crazy. And AMC's getting worked today because that other cinema came out and said they might be going bankrupt.
Yeah. Well, again, we're going to see a lot of bankruptcies. Again, the last 2 years, free money, zero. We got to have the zombie companies. Again, bankruptcy is not like they cease to exist. Cinemarks will still show movies. They just got to go clean up their balance sheet, write off some debt, just get back at it, right? Yeah, the AMC, it's just bad, just bad acting.
I gave up, and not that I was ever, by any stretch of the imagination, that's the furthest thing from what our company invests in. But not that I was ever like on board with what they were doing. But when they started, again, it was like the tipping point for me when they started talking about delivering popcorn. I was like
I'm out.
Where is this going?
Where's the short button?
Exactly.
Oh man, this has been so much fun, Taylor. Where can people find you? Because you're putting out daily stuff.
Yeah, thanks for allowing me to say that. This, at Life Goal Investments on Instagram is where we're at.
Yeah, follow him. Puts out daily stuff. Very helpful if you're in the market. Great stuff to watch. Thanks, Taylor.
You're the man, Michael.
Mm-hmm.